20 years ago, an independent professional investment organization was set up to invest the Canada Pension Plan on behalf of the millions of working and retired Canadians. It had a very clear goal, which is to earn the best possible investment returns. And today, CPP Investments invests across public equities, private equities, bonds, private debts, real estate, infrastructure, and many other areas, all in order to build a resilient, globally diversified portfolio and to grow the CPP Fund to help ensure the financial security of millions of Canadians now and for generations to come.
Hello. A warm welcome to everyone in Newfoundland and Labrador joining us today. Thank you for making the time to be with us at our public meeting. My name is Heather Monroe Bloom, and I have the pleasure of serving as chair of CPP Investments, the Canada Pension Plan Investment Board. Every 2 years, we hold public meetings with Canadians. It's our commitment to update you on how we are investing the CPP Fund to help ensure it will be there for many years to come, and to provide you with an opportunity to ask questions directly to our leadership. CPP is an important foundation for Canadians in retirement. Understanding the fund's performance and sustainability will provide information and reassurance regarding how it fits into planning for your future. This year, against the backdrop of the global pandemic, we're holding these meetings virtually. We believe this is the safest way to provide you with a full report on our work, while at the same time giving you an opportunity to ask questions. In developing today's program, we talked with numerous Canadians in advance. We wanted to determine what questions you might like us to address. Over the next 20 minutes, we will touch on many of these topics, including our approach to sustainable investing and how we design a resilient CPP fund for the long term. We will also share our most recent financial performance, and you will hear from our CEO, his perspective on the current global economic situation. Finally, we have 35 minutes set aside to answer your questions. You may submit your questions at any time during the presentation, and we will do our utmost to respond during the question period, and if not, we'll follow up with you after the broadcast. 10 years ago, I joined the board of CPP Investments, and I was honored to become chairperson in 2014. Over these years, our steadfast goal has been to provide the highest standard of governance and oversight at CPP Investments. Let me begin by saying a few words about how we do this on your behalf. In a challenging and rapidly changing environment, sound governance plays a critical role in ensuring that CPP Investments continues to meet its obligations to each of you, the 20 million Canadians who contribute to the CPP Fund, and those that rely on it as part of their financial security in retirement. CPP Investments operates at arm's length from federal and provincial governments and is guided by the independent, highly qualified professional board of directors, which I am privileged to chair. Our governance structure is designed to support a clear goal to invest the funds that come in from contributors, maximizing returns without incurring excessive risk. In addition, the assets in the CPP Fund are strictly segregated from all government funds and are thus protected from any political interference. Our board is comprised of experienced individuals with the skill sets and expertise needed to provide effective oversight of this global investment organization. The board is also diverse, with a wide range of relevant professional backgrounds and global experience. We are each committed to serving the key public purpose of the fund. We are strong believers in the value of transparency and open dialogue, and mindful of the important role entrusted to us to help ensure the CPP remains sustainable for future generations. That's why each year we publish an annual report of our financial performance, and in it, other important information which you can find on our corporate website. And every 2 years, we hold public meetings across Canada to answer questions from Canadians. Over the past 24 months, the board has continued its ongoing commitment to continually enhancing our governance. This has included approving the next phase of the organization's long-term strategic direction, a renewed focus on conduct and culture, and further strengthening of our risk management practices. Last year, the board approved a new integrated risk framework for the organization, and this year, the board created a standing risk committee that oversees this area. Our approach looks at all risks holistically, from those that stem from investment decisions to those posed by financial markets. We also keep an ongoing watch over emerging threats, such as climate change, cybersecurity, and geopolitical risks. Our ongoing crisis preparedness has positioned us to respond quickly to the COVID-19 pandemic. Through 2020, the board has worked closely with management to ensure the fund is well positioned to manage through the significant financial and operational impacts of the COVID-19 pandemic. Acknowledging these unprecedented circumstances, my fellow directors and I are confident that management is taking every appropriate step to weather these exceptional challenges to best of ability. We continue to have strong conviction in the organization's planning for the long term. Our highly constructive and collaborative relationship with management enables us to work together on the evolution of our strategy. Management understands their role in executing the strategy, and the board's role remains focused on oversight and guidance. Our 2025 business strategy, approved 2 years ago, is designed to keep us well positioned to mitigate future financial disruptions and to capitalize on new growth opportunities in the years ahead. We strive to remain a leader in realizing global governance best practices for our industry, and we actively promote strong governance practices not only in CPP Investments, but in all of the companies in which we invest. In doing so, we continue to represent the very best interests of you, our contributors and beneficiaries across Canada. On behalf of the Board of Directors and management, we are united in our commitment to the highest standards of corporate governance, and we're proud to be recognized internationally as a leader in pension plan management. I'm very pleased to report that your CPP Fund is in strong, capable hands under the leadership of our CEO, Mark Machin. I would now like to turn it over to Mark to share a few words with you.
Thank you, Heather. We're living in extraordinary times. The global pandemic continues to impact people, communities, and economies. It's altered our lives and how we live. And while this is not the first disease to spread around the world, this pandemic is casting a long shadow. Health officials and governments are learning many things about COVID-19, with better treatments, testing, and the global race to develop and produce a viable vaccine well underway. Yet, there's much more we need to know. It's this uncertainty and the start-stop of reopenings that's adversely impacting confidence in global economies. And Canada is not immune. Our economists at CPP Investments project the world economy will contract by 3.4% this year, a stark reversal from the 2.8% growth anticipated at the beginning of the year. Yet we're now starting to see improvements in many parts of the world where the economies are emerging from lockdowns and are now turning back to growth. In Canada, as businesses and retail have started to reopen, recovery has begun. However, it will likely be slow and extend well into 2021. All of you across Canada, from coast to coast to coast, have been deeply impacted. But there's one thing you don't need to worry about, and that's the financial security of the CPP Fund. We invest the CPP Fund to weather all types of storms. And while a global pandemic of this magnitude is rare, the likelihood of a big event affecting financial markets is more frequent. We not only anticipate, we prepare for moments like this. Over the past decade, we've enhanced our risk management practices and properly prepared a financial crisis plan, business continuity practices, and even a pandemic response plan. So when the pandemic hit, we quickly moved from 9 offices globally to more than 1,800 home offices, continuing to invest the CPP Fund with the same skill, professionalism, and good judgment to help protect your retirement security. The strength of our long-term investing approach is a well-diversified portfolio that helps to ensure the fund is resilient. We invest across the globe in a wide range of industries and asset classes to ensure the investments are diversified and not dependent on just one area. And this minimizes the risk to the fund and helps us to earn the best possible returns over the long term. Right now, the global pandemic is actually accelerating growth in healthcare, technology, data infrastructure, and renewable energy, and that's where we're making investments, amongst many other diverse sectors. We're also looking closely at emerging opportunities created by the new habits likely to shape our post-COVID world. Opportunities such as the rise of e-commerce and online grocery, the adoption of telehealth, the increase in remote work, the creation of new complex supply chains, and the shift in population away from urban centers. We expect some of these to be long-lasting and will create significant investment opportunities for the future. Over the next 12 to 18 months, we expect the global economy will bounce back, albeit slowly. But whatever happens, you can continue to trust the CPP will be there for you for many years to come. Here's a short report on our performance.
At CPP Investments, we never lose sight of our long-term objectives in our daily work. Maximize investment returns for the CPP Fund and minimize risk to help provide financial security for generations of Canadians. The fund grew to $434.4 billion as of June 30th, 2020, a $33.8 billion increase over the past 12 months. Our active management strategy and the strength of the diversified investment portfolio we've built over the years allowed us to weather the storm as the world faced extreme challenges this year. We can't always predict the future, yet we do plan for it. Our sophisticated investors take a disciplined long-term approach to diversify the fund across geographies and asset classes, maximizing our returns over a long horizon against a wide range of possible events. That's why the true test of our performance is our long-term results. In the last 10 years, we earned 10.7% net nominal return, or $259.8 billion in net income after all costs. Investing today with an eye to the future, we're building a portfolio designed to grow and generate returns over time. This year, we continue to make significant investments in innovative healthcare and advanced technologies, infrastructure, autonomous vehicles, and renewable energy, all critical in the years to come. Now, as we look ahead to a period of uncertainty, we will stay on course with our long-term investing strategy, prudently manage our capital, and closely manage our existing portfolio of investments. We'll continue to stress test our portfolio as we always do, looking at optimal diversification and strong investment returns under a variety of future scenarios. This way, we can be confident that the fund will continue to deliver decades of steady performance. It's why the latest report from the Chief Actuary of Canada confirmed that the fund remains sustainable for at least 75 years. While our daily lives may have changed, the sustainability of the CPP Fund has not. Our sound long-term strategy is essential now more than ever. We'll continue to invest and grow the fund for millions and millions of Canadians as a critical part of their financial security today and for many years ahead. At CPP Investments, we believe sustainable investing is simply smart long-term investing. We have a clear goal to maximize return without undue risk of loss. Effectively managing environmental, social, and governance factors creates sustainable value over the long term.
10 years ago, we set up a group to look at environmental, social, and governance risks. And that group has grown from 2 people to 15 people today that look at investments across the organization to assess these risks.
We recently updated our policy on sustainable investments to more clearly articulate the business case for doing this and our expectations of corporates with respect to how they integrate ESG considerations into their strategy and operations.
When it comes to actively engaging with companies, we focus on 5 key areas. Water, one of the world's most critical resources. Human rights, because companies that don't respect human rights face potential operational turmoil, higher legal risks, lack of community support, and damage to their reputation. Executive compensation. We see clear evidence of long-term shareholder value when there is alignment between executive pay and company performance. Board effectiveness. Having a diverse board in place to guide strategy and oversee risks is critical to achieving superior financial performance. we have a global board gender voting practice to take a stand for increased representation of women on corporate boards around the world. In 2020, CPP Investments voted against the election of directors at 323 international companies for not having any women on their boards. And finally, climate change, one of the most significant global challenges of our time.
Climate change is one of the big issues of our generation, and as long-term investors, we need to think about both the risks and opportunities that climate change present. Climate change creates investment opportunities as well. For example, in renewable energy, where we've made investments in wind energy, in solar energy, and another one would be electric vehicle charging stations. We think that's going to be an important piece of infrastructure in the future where there are more and more electric vehicles on the road.
Over the last year, all major transactions have incorporated climate change due diligence. We've reviewed over 100 transactions worth more than $100 billion. We aim to deliver the investment teams and their investment committees clear line of sight of both the climate risks and opportunities associated with the investment, but also approaches to managing those risks or capturing those opportunities where we proceed with the investment.
One thing that we're really excited about is something that's happening here in Canada, which is an investment that we've made into carbon capture technology that we think could be really important in the future.
Meeting the needs of almost 8 billion people on the planet today is already creating tipping points with respect to water stress, pollution, income inequality, and many more factors. Consumers' expectations are quickly changing in response to this, and the number of companies that have failed to realize this and destroyed considerable shareholder value continues to grow. To be a successful investor in this new century, we have to be able to identify the companies proactively managing this reality, but also those failing to capture the risks and opportunities of this new century.
In some ways, the pandemic has pulled forward the future in terms of change. So now we have an opportunity to invest in things like climate change, where we can put our money to work in things that will help us have a more prosperous, sustainable, and healthy environment.
I don't think that many of us have really thought long term about how we're going to save up for retirement. And when we do think about it, it's usually that retirement is a long way out.
Young people are concerned about buying their first home and settling into their careers. Retirement isn't on their radar. Many people don't have access to company pension plans that may have been available for previous generations. And on top of that, many people are struggling to save for retirement. Having the enhancements to the CPP is critically important to their financial security in retirement.
The increased benefits are really important for Canadians in the long term. It's going to provide a stronger and more stable income for today's generation and for future beneficiaries.
I want all young Canadians to know that the CPP will be there for them when they retire. It's a foundation for their retirement that they can count on.
A lot of our investments globally are very long-term. We really make the best investments through our intensive research deep dives into specific industries or sectors. I think it's great that we have a separate organization that actually manages the money on behalf of Canadians, that's sustainable for the long term, and it'll be there for people when they retire.
Whether you're starting in your career or you're nearing retirement, it's important to the social fabric of our country. I get to see firsthand the bright, talented minds that work at CPP Investments. It's inspiring to see how many people are dedicating their lives to growing the fund and working towards a very important public purpose.
At CPP Investments, we design a portfolio to help ensure the CPP is strong, resilient, and sustainable for the long term. Our team of professional investors invests around the world in public and private assets like stocks, bonds, real estate, and infrastructure. Together, this delivers a well-balanced, globally diversified portfolio that will help achieve higher returns over a very long horizon and materially above what can be achieved through a low-cost passive investment strategy.
In designing a portfolio, the first step is looking at the risk. What is the appropriate risk target? Because we have to take some amount of risk in order to earn returns. We consider market losses or short-term volatility, reputational risk, and the ability to sustain a long-term strategy.
We have to balance short-term risk with longer-term returns. If we took an insufficient amount of risk, we would not be able to sustain the plan in the longer term. But on the other hand, if we took too much risk, there'd be more volatility in the near term and downside risk for beneficiaries and recipients. So we try to balance those two things together to get the best outcomes for contributors and beneficiaries in the near term and in the long term.
The total portfolio approach means that we look beyond the asset class labels and try to identify what are the risk-return factors that drive returns for different investments.
Principally, these are economic drivers, things like GDP growth, the business cycle, interest rates, inflation, the way in which those broad economic factors affect asset returns. And we try to design a portfolio that's quite balanced across all those various economic factors. The reason for that is that they often behave in quite different ways. So by having a balanced set of exposures, we get a more resilient portfolio that's better diversified and more able to deliver on our mandate.
Diversification is the most powerful way to mitigate market downturns and enhance investment returns. It helps to build a resilient portfolio.
And the way diversification works is effectively it means that you are investing in assets, in sectors, in companies that don't move together all at the same time. One asset may be doing well and another asset is not doing so well, and there's kind of a natural offset or a bit of insurance or hedge that comes from diversification. You could think of it as essentially meaning that we're not putting all our eggs in one basket. We're putting our eggs in a lot of different baskets. If a given country is doing poorly and you can't be sure in advance whether that will happen, you've also invested in another country that's doing well. The same thing would be true with particular companies. And this enables us to have a more resilient portfolio.
To determine how resilient our portfolio is, we perform stress tests to see how it will react under various scenarios. And then, COVID hit.
Market crisis due to COVID-19 in March was unprecedented. However, in a crisis like that, you just really discover whether the diversification is working, and the diversification in our portfolio worked as intended. So our losses in the portfolio were limited because they are offset by the outperformance or the gains from government bonds and the depreciation of the Canadian dollar. And it worked exactly as we expected.
We manage the fund in a way that's responsible, disciplined, and consistent with our mandate so that there's sustained value added over the long term. CPP Investments also has in place robust valuation processes to measure the fair values of our investments on an ongoing basis. With a well-balanced and globally diversified portfolio, Canadians can trust that the CPP will be there for you today and for generations to come.
On behalf of the more than 1,800 CPP investment professionals around the world and our board of directors, thank you for taking the time to be with us today. We hope we've given you a better understanding of what we do and of our commitment to you, the more than 20 million CPP contributors and beneficiaries. We would now like to move to the question and answer session of our meeting.
Hello, and welcome to all CPP contributors and beneficiaries in Newfoundland and Labrador. As Heather just mentioned, we're now moving to this final segment of the public meeting, the question and answer period. Before kicking it off, I would like to note that we are currently meeting virtually throughout all of Newfoundland and Labrador, and would therefore like to acknowledge the lands and traditional territories of the Indigenous peoples of Newfoundland and Labrador. My name is Tara Perkins. I am CPPIB's Managing Director of External Affairs, and we're happy to host these meetings to provide you, the CPP contributors and beneficiaries, with the opportunity to ask questions about our organization and the role it plays in helping ensure the fund's sustainability. I'm going to be moderating this session today, and I'm here with Deborah Arita, our Senior Managing Director and Global Head of Real Assets, who's going to be answering your questions.
Thank you, Tara, and thank you all for participating today. As Tara mentioned, I'm Deborah Arita, Global Head of Real Assets, which means that I lead the investment department that includes real estate, infrastructure, power and renewables, energy and resources, and our portfolio value creation team, which works across our portfolio, including private equity. I'm excited to take some important questions today and provide you with key insights into the activities of CPP Investments.
And Deb, I understand that you've spent some time in Newfoundland and Labrador in the past.
It's true. Back in the early 90s, I spent many months as a young lawyer working on a big file based in Newfoundland. And I remember a few hair-raising landings on the Rock with 90-kilometer-an-hour crosswinds, but as well, my amazement at the beauty of the province in the spring.
It's so gorgeous, and we normally do these meetings in person. This year, due to the pandemic, we're doing them virtually, but we want to ensure they're really interactive, so please ask us questions. Any questions you would like about the strategy or the fund. If you look at the bottom left-hand side of your screen, you'll see a little blue button that says Ask. You can just click there and send your questions straight to us. If we receive more questions than we're able to answer during the duration of this meeting, we will keep your questions on file, and we will endeavor to get back to you in keeping with our protocols by email in short order. So Deb, shall we kick it off?
Sure.
The first question is, how many CPPIB offices and employees do you have?
We have 9 offices and over 1,800 employees.
Great. Second question, and this is one that we saw you discuss a little bit in the videos at the outset, is what are you doing to mitigate climate change risk?
So we have a firm-wide program on climate change, and we look at it across 3 pillars. First is we have a team focused on working to integrate climate change risks into our long-term portfolio design. The second is a risk team that looks at the climate change risks in our existing portfolio. And third is a team that's focused on integrating the analysis of climate change risks and opportunities into our individual investment decisions.
Great. So we've got a video question that we received in advance. This one is addressed to our CEO, Mark Machen. So we'll watch that. Maybe just before we play it, remind everyone again, please ask questions. The little blue Ask button at the bottom left of your screen. We're really looking forward to this session. So with that, maybe we'll play the video for Mark.
This is Sharon Callahan from CARP, Newfoundland and Labrador. The current pandemic has disrupted the norms that we have been accustomed to, and things such as educational delivery, telemedicine, remote working, e-commerce, and massive government deficits, just to name a few, are weaving their way through the economic and cultural fabric of nations around the world. There is also increased nationalism, increased global tensions, and the weakening of alliances that have served us well for the past 70 years. In other words, there are massive disruptive forces at play. But history has taught us that disruption also leads to opportunity. So our question for the annual general meeting is, where does the CPP Investment Board see opportunities for its activities over the next 10 to 30 years?
That's a great question. So we'll go to the answer from our CEO, Mark Machen.
Thank you for the terrific question. Disruption really is top of mind for us. And in fact, this pandemic has accelerated a lot of the digitization and disruptive trends across different sectors. So we've seen increases in telehealth, in e-commerce, in fintech, in big data. We've also seen and will continue to see big shifts happening in the long term, like demographic shifts in many countries around the world, and also this transition from a carbon-based energy economy through to a low-carbon economy. So these are all areas that we pay a lot of attention to in our investment strategy. Last year, we established a presence in San Francisco, particularly to increase our insight into the global technology ecosystem. And part of that is our thematic investing team, which conducts really in-depth, top-down research to identify a lot of these trends. And some of the themes that they've focused on include autonomous and electric vehicles, healthcare, technology and AI, and the global shift to online retail. In terms of geographies, we see potential strong returns in several economies that have really grown their exposure to disruptive technology-based companies over time.
Good question. So Deb, our next one is, why do you have offices outside of Canada? Shouldn't you prioritize giving Canadians jobs?
That's a great question. The first piece of it is about diversification. We think the best way to ensure the safety of the fund is to have a diversified portfolio, which means that we're invested across geographies and across different sectors and asset classes. So we can't keep it all in Canada. The fund is exposed to a lot of risks relating to our domestic economy, and in order to ensure its sustainability, we need to diversify around the world. Which is why we have offices outside of Canada, because when we're investing outside of our home market, we want to make sure that we're doing it well. And so we've put offices in the markets, in the key markets where we're investing, so that we can have the boots on the ground, the network, and the local insight to make sure that we're making well-informed investment decisions and able to monitor and manage the investments that we make on behalf of 20 million Canadians.
Great. So for our next question, this is one that we received by video in advance for you, so we can watch that now.
Hi, I'm Emily and I'll be finishing my engineering degree in 6 months' time. I'm wondering what the Canadian Pension Plan Investment Board is doing to ensure that I will be protected many years down the road when I'm looking at retiring. Essentially, how can I be sure that this program will be there for me in 30 to 40 years?
Thanks, Emily. That's a great question, and one that is probably on the minds of many Canadians, young Canadians in particular. So let me give you 3 reasons why you should be confident that the fund is sound. First is the fund is subject to independent assessments. Every 3 years, the Chief Actuary of Canada reviews the sustainability of the fund, and the most recent report, issued in December 2019, reaffirmed that the Canada Pension Plan is sustainable for the next 75 years. Second is we safely navigated through the market disruption related to the COVID-19 pandemic. Through the market volatility, we relied on work that we've been doing over the last decade since the global financial crisis, and that involved leveraging teams from across our organization during the crisis. Our financial crisis management team, our business continuity team, and our pandemic crisis management team. And through that, our strategy of diversification served us well. Which leads me to my third reason that we should have, or you should have, confidence in the fund, which is our track record of investment returns. Over the last 10 years, our annual average return is 10.7%. So in conclusion, the fund is sound, and as caretakers of your money, we're incredibly committed to maximizing returns without undue risk of loss on your behalf.
Okay. And I should point out for the viewers that if you want to look at more information about our returns, our annual report is available down the left-hand side of your screen. There should be a tab that says Resources, and you'll find there both our annual report and our Sustainable Investing report, as well as some helpful links for information you might look for on contributions and benefits. So our next question, Deb, is why don't you have an ethical investment policy?
It's a good question. There are some funds that do have that kind of policy, but our mandate is to maximize returns without undue risk of loss. And we think the best way to do that is to let our investors review the full universe of investment opportunities and then do our work bottoms up. And when we're doing that, we are incorporating ESG, or environmental, social, and governance considerations in our work. So we're thinking about the impacts of environmental, social, and governance risks when we're doing our investment analysis, but we're not taking a blanket top-down approach to exclude whole sectors from the universe of potential investments.
Okay. And this is an interesting one. How do you assess when you're going to sell an investment?
That's another good question. My view is that as investors, our job is to look at not just new investments, but also monitor and add value to investments while we hold them, and finally, make smart exit decisions in order to return to realize the returns that we're generating for you. So as part of that full cycle of investing, while we hold the investments, we actively monitor the changes to the investments, the changes to the environment that might impact the returns of those investments, and we make active decisions whether to hold or to sell our investments.
Okay. So the next question is, I saw in the video that you talked about reputation risk. What does that mean, and how do you manage it?
Reputation risk is something that for a long time, with the help of the folks from Tara's team, we have incorporated into our active fundamental investment analysis, meaning that when we're looking at individual companies and assets bottoms up, part of our due diligence process involves looking at the reputational risks associated with that particular investment. But more recently, we've had to think about how to assess that risk, not only in our bottoms-up individual asset by asset or investment by investment process, but also in some of our broader investment programs. So for example, more recently, we've established a protocol that allows us to apply a lens of reputational risk to our quantitative investment program, which involves hundreds of securities from a pool of thousands of securities and is constantly changing. But we've implemented a way to take a top-down approach to that program in order to properly assess the reputational risk from the small individual securities within that portfolio.
So we have a video question that we've received for you, so maybe we'll go to that now.
Hello, this is Stephen Wallenitz from MUNPA, the Memorial University of Newfoundland Pensioners Association. I have a question about CPP Investments strategies during economic crisis. In what ways, if any, did your investment strategies change during the 2008 economic meltdown? And how have your investment strategies changed, if indeed they have, since the beginning of the 2020 COVID-19 pandemic? Have you simply maintained the same investments or looked in one way or another for safer harbors? Thank you very much. I look forward to your answer.
Thank you, Stephen. Despite economic uncertainty, our investment strategy remains the same. And I'll talk about three aspects. First is diversification. We believe that diversification helps protect the fund from outside impacts on particular industries or geographies. So for example, during the pandemic, some of our investments in live entertainment related industries were impacted. But on the other hand, our investments related to online activity and digital activities and data performed very well. So we invest across asset classes and industries and across geographies in order to provide you with a diversified and resilient portfolio through uncertain times. The second is our mandate, which, as you know, is to maximize risk without undue risk of loss. So what does that mean during times like this when there's a lot of uncertainty? What it means is that as much as possible, we maintain our business as usual approach. We seek out new investment opportunities while remaining prudent. And finally, the third aspect of our investment strategy that remains unchanged through uncertainty and can even be an advantage through times of uncertainty is our focus on the long term. During this time, we've been researching ways in which we think that the pandemic is going to change the world. We think in some ways the pandemic has pulled forward the future and accelerated some of the changes that we were already seeing, like the adoption of online activity, the increasing complexity and need for resilience in supply chains, and the trends in urbanization, such as the rise of second-tier cities. These kinds of changes will give us investment opportunities, and disruption and market uncertainty can also provide us with the opportunity to leverage our structural advantage of that long-term time horizon and the stability of our fund. When mutual funds may be forced to sell at the bottom to meet redemptions during market dislocations, the structure of our fund allows us to hold on to our good assets and see the benefits of them as the market recovers. So in short, during periods of uncertainty, our investment strategy remains the same. We focus on diversification, we seek to maximize returns without undue risk of loss, and we remain steadfastly focused on looking at the long term on your behalf.
Okay. So this next question is a similar theme, actually, and I think you've probably covered it, but I'll ask it in case there's anything you wanted to reinforce. How did the fund perform during COVID-19, and should I be worried about my retirement?
I'm really proud of how we as a management team operated and managed through COVID-19. We had the benefit of preparing for almost a decade since the global financial crisis and had prepared protocols for what we would do in the face of a financial crisis. We even ran desktop exercises prior to the crisis that really helped us respond well when it actually hit us. So I would say you should feel good about the stability of the fund. Our returns for the year that ended at the depths of the crisis on March 31st, 2020, were still 3.1%, and our longer term returns over the 10-year period were 10.7%.
Great. So Deb, that's actually the end of our questions. I know we have about 5 minutes left in the meeting. Is there anything else? Well, maybe if everyone wants to take a couple more minutes to consider any questions. Is there anything else, Deb, that you wanted to say to our viewers today?
I just want to thank you for attending, for listening. I think we've got an incredible group of motivated and inspired employees, and we're proud to serve you. So thank you for listening, and happy to answer any more questions you might have.
We do have one more, so we'll take it. Thank you. So someone is asking about our carbon footprint, and if we can explain how we disclose our carbon footprint. So we could maybe point them to the resources section again as well. Our sustainable investing report can be found there. And then Deb, did you want to add to that?
Yeah, so as Tara mentioned, we do have detailed disclosure on our carbon footprint in our recently released sustainable investing report. But what I would say about our carbon footprint disclosure is it is something that we're developing and evolving over time. Last year, for the first time, we disclosed our carbon footprint on our public investments, and this year we expanded that to include our private investments. But our carbon footprint is really just one piece of a broader program that we have focused on climate change, where we're incorporating the analysis of climate change risks and opportunities at the total portfolio design level, at the risk assessment level of our existing portfolio, and that's where the carbon footprint reporting comes in, and finally incorporating it into our bottoms-up individual investment decisions.
Yeah, thank you for the question. It looks like that is the end of our questions, so thank you so much, Deb, for taking this time today.
You're welcome. We really appreciate your participation and engagement today, and hope this meeting has help you become more informed about CPP investments and the fund's sustainability over the long term. We also invite you to complete this short survey that appears on your screen so that we can hear from you directly. On behalf of our board and management, thank you again for your participation. Be well and stay safe.